Let's talk about commodities now, and for that, let's go across to Kishore Narne. He's Senior VP Anand Rathi Commodities, and he joins us right here in our studios. Kishore, hi, welcome to the show. There's lots happening in the Indian markets and lots happening in the international markets as well, as markets are awaiting the FOMC announcement there. But that really clearly seems to be like a disappointment for the precious metal prices. Gold and silver have continued to decline, more 0.5% of a cut coming in today as well.
Yes, Manish, I think primarily markets are moving away from safe assets to riskier assets, especially if you have seen over the last 15 days or a month, the market movements have been going back, in the sense the correlations have been going back to the historical relationships. So right now, when you get a positive data from the US, the dollar is benefiting from that, US equities are benefiting from that. Again, you're seeing a selling in gold, you're seeing selling in euro. So I think the fundamentals are returning back slowly. It is not no more a risk on risk off kind of a game. I think predominantly fund managers are trying to play on the fundamentals of various asset classes. So I think if this shift is going to continue for next few months, probably I think I'm looking at US equities at a very strong spot right now. It's been in a sweet spot already because of the subsidized profits, because of the lower interest rates. Their balance sheets are pretty strong. So I think the capital will move away from the riskier, the safe haven assets, especially like gold. And we will have a double impact, especially in India, because one way your dollar is strengthening, and also gold going weaker. So that means obviously you will have Indian gold prices going down significantly.
You have a sell call on gold and silver both, Kishore. Is that for the very near term, or is that the trend that could follow a couple of months?
No, I think the short term obviously looking pretty weak. I think both on technicals or even on if you're looking at the global fund flow scenario. But I think for the entire next quarter or so, gold will be on a bearish foot only, because there's no incentive right now to come into gold at this point of time. You don't have any risk factors, because the crease is somewhat solved, and then you don't have any fresh triggers until unless there is a spike in the crude oil prices, or if there is any geopolitical tensions. Otherwise, gold should remain pretty range bound to a bearish bias.
The base metals have been surprising on the upper side. Is that the data that's coming from US? China imports has been positive as well. Copper inventories have been on the lower side. Do you think that would continue to support this sector?
I think as far as inventories are concerned, I think most of the inventories movement happened from LME to Shanghai. So it's no point in saying that Chinese imports are being pretty positive to the sector. I don't think so, because they've just built their exhausted inventories which were there earlier, and then they have actually built up a new inventory setup also on Shanghai. But looking at the global fundamentals again, that the US economic numbers are one thing which is pretty encouraging for metal sector. There are a couple of supply side issues. One is that Chile mines facing the disconnections because of the heavy rains, and then Indonesia still has that mine problem on the labor issue. So I think those are all supporting, but we would see these prices pretty range bound in the next month or so. Maybe $8,600 to $7,500 is the range which I'm looking for copper.
How about the crude prices? Because while we saw the crude inventories gain up in US, the product inventories actually came down. That would be a supportive one for that?
Yes, I think right now when you're looking at crude, probably there are both sides pull and push factors. The inventories again started to build up as we shift to the heating oil to gasoline demand season. I think inventories are going to build up because gasoline we have a comfortable inventories. But again, the Iran issue will be underpinning the prices. So probably we might see a small corrections towards $102, $103 levels on WTI. But eventually again it will go up to around 117 by maybe around October or December.
All right, Kishore, we'll let you go at that. Thank you so much for joining us. That's the view coming in from Anand Rathi, selling into silver, gold and copper today, but buying into nickel and selling near term for crude as well into the markets.